A very good evening to you all, and welcome to the 19th episode of Market Replay. If you are tuning in for the first time, I'd like to welcome you to this series that I have been uploading over YouTube. Apologies. Just to give you a brief understanding of what I seek to achieve with these videos, and that's simply to share my perspective and my understanding of how to trade price action and how to take on particular trading opportunities, right? And how that will be done is that I will be looking at a day's worth of price information in the form of candlesticks, and I will then be highlighting the different trading opportunities and how we would have traded those particular opportunities. For today's episode, we will be looking at the United States dollar against the Norwegian krone. And the trading day we will be focusing on is the 3rd of August, which is this past Monday. Let's get into it. Like with every video in this series, I like to start off by identifying the trend. So we had a very bearish start to the day. However, the bulls then kicked in and pushed price to the upside. Okay. Price was continually pushed to the upside with the formation of higher lows and higher highs, right? And then we had the formation of a consolidation region over here. Okay. And these areas of consolidation are very important to us because these are the areas that then allow us to join an ongoing trend, right? And that's because the price or the market then takes a pause and allows for a new accumulation of orders to enter the market, right? Let's continue. Price continued to push to the upside. Then we had the consolidation area formed again, and that's how our day closed, right? So we had the formation of two consolidation areas. Let's dive deeper. Move on to a lower time frame. All right. What I like to say is that you should start on your left hand side before moving to your right hand side. So starting on the left, we have the formation of a swing high, and your swing high then gives you your area of resistance, all right, or your area of supply, right? With that understanding, then pull out our Fibonacci tool and forecast this move to the upside. Now the rules for this strategy then indicate to us that we are interested in closes below the 50%, because that lets us know that we have a deep enough consolidation or a deep enough retracement, right? That would give us a nice range so that we could forecast a good TP. And in this case, we didn't have a close above or below 50%, so we would have skipped out on this trade, right? Let's move on to our next area of consolidation, which is this one over here, right? Let's go to it. Let me just clear up. Okay, now like always, what you want to do is you want to start on your left before heading to the right hand side, right? This is my area of resistance. Okay, let's draw it in. That's my area of resistance, right? And that tells me that I have sellers camped within this particular region, right? Because they see that price is high enough for them to then supply the market with their CFDs, right? Sell their CFDs into the market. With that understanding, then pull out our modified Fibonacci, forecast this entire move to the upside, and what we then get to understand is that we do have a deep enough retracement, right, which is the close of this bearish candle. And what we do then need is a close above this high before we could take a position, right? Let's forecast our Fibonacci. We had a close above that high with the closing of this bullish candle over here. Right, now let's have a look. Our minimum risk reward that we aim for, which is 1:1, sits above our resistance zone, and that simply then excludes this trade for us, right? So we would have not taken this particular trade because our minimum TP level has an obstruction in its way, right? So we need to beat this area of resistance first before we then enter this trade, right? So we would have not taken it. And as you can see, price then pushed up, entered our resistance zone, and then turned back to the downside. And hence the reason why we do not want to take trades where our minimum TP or take profit region is obstructed by a support or resistance zone, right? So we would have not taken this particular trade, right? Let's go back to our bigger picture, and that's how our trading day worked out for this particular pair on a Monday, right? We had a very bullish day for the United States dollar, all right, with some weakness coming in from the Norwegian krone. We then had two trading opportunities presented to us. However, none of them were meeting our criteria, and we skipped out on taking both of them. And we can then see in one case, which is this case in particular, we were then saved from experiencing a loss, right? Ladies and gentlemen, that then brings us to the end of this episode. If you found it very beneficial and it added some knowledge to the way you understand price charts, please do like the video. If you haven't subscribed, please do subscribe. And while you are in the process of subscribing, or once you have already subscribed, please do hit the bell notification icon so that you can be alerted the next time I upload a new video. To add on, if you have a particular currency pair that you'd like me to look at, please do drop your suggestion in the comment section on the video, and then I will then look at it in the next episode. Just to give you some background as to why I chose this particular pair, this pair as well was then highlighted to me by a particular viewer who asked me to review it for them for this particular day. So to that viewer, thank you very much for your contribution. I highly appreciate it. Ladies and gentlemen, that is the end of this episode. Thank you for tuning in, and I'll see you on the next one. Cheers.